All right, guys, back to work tonight, Thursday evening, September the 10th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, my job tonight is pretty simple. My job tonight is to help us find the best trades for tomorrow. That's Friday's trading session. And I got a great video in store for you guys and gals tonight. Charts are already in the background. Got some great levels of support and resistance. Got some great setups I'm tracking for tomorrow. Finally, Friday trading session. Before we jump in, though, and get our hands dirty on these charts, I'm really excited about tomorrow's session. Hope you are as well. Before we jump in, though, and get started, don't forget, subscribe to this YouTube channel. I don't want you guys to miss all the good stuff we publish every evening on this video, so make sure you click that subscribe button at the bottom. And don't forget, if you guys have any questions, drop those questions in the comment section below. I'll get them answered as soon as I finish up here this evening. And as always, I appreciate you guys tuning in every evening. If you're like me and you rely on this nightly newsletter to get your mind right and get those charts right for tomorrow, how about a thumbs up for me tonight here if you guys appreciate the video content here on this video newsletter. So don't forget, guys, make sure you subscribe. I don't want you to miss all the good stuff we publish on this YouTube channel. Drop those questions in the comment section if you got them, and thumbs up if you love the video every evening on this nightly newsletter. But speaking of newsletter, let's cut to the chase here, shall we? Time is ticking. Friday morning is right around the corner. Let's get this thing started with the calendar for tomorrow. But of course, it's a Friday morning. It is September the 11th tomorrow, also known as Patriot Day here in the U.S. Tomorrow, of course, is a Friday trading session, and that means we are typically early in, early out on a Friday, right? We usually trade about 8 o'clock until about 11:30 on a Monday through Thursday, right? But on a Friday morning, you really got to have a good reason to be trading after 11 o'clock, right, on a Friday. I always start watching price action closely about 10:45, 10:50 on Friday morning. So sweet spot tomorrow, 8 o'clock to 11 o'clock Eastern time. And as I've been mentioning a lot this week, we've seen a lot of our best setups in that block between 10 o'clock and 11 o'clock Eastern time. We saw that happen today, right? Let me talk about last night. A lot of the chop we saw early in the session started to kind of thaw out into that 9:45, 10 o'clock. And 10:15. So 8 o'clock to 11 o'clock, that's where I'll be looking for the best setups tomorrow. But again, that block from 10 o'clock to 11 o'clock lately has been some of our best trades in the trade room, right? So keep that in the back of your mind tomorrow, right? Tomorrow's a Friday. It is, of course, early in, early out. Got to have a good reason to be trading after 11 o'clock. Now, it does sound like, we're talking about stimulus this week, right? It does sound like these stimulus talks have finally come to a bit of a closing, a bit of an end here right now. We saw a kind of what they called a skinny, stimulus bill that failed to pass the Senate here this afternoon. So it does look like the word stimulus might be out of our vocabulary here for at least a few weeks here. We'll see though, right? We'll see. Those politicians, they love to work us up, right? So we'll see if that comes back to life here next week. But for right now, it doesn't look like we're going to see any big positive headlines or big updates, right, on stimulus for tomorrow. We are watching rollover. You probably saw a little pop-up on your charting software today. We do have rollover on the E-minis tomorrow, right? So the S&P, of course, the NASDAQ, the Dow, the Russell, right? Our favorite, of course, is the S&P 500. So you do want to be aware of that. We will be most likely moving from that S&P 920 over to the ES 1220, most likely, if not tomorrow, right, it'll probably be on Monday. So don't forget, once the 1220 contract has more volume than the 920 contract, and tonight we'll be analyzing the 920 contract right now, because as of right now, the volume is still very much poised for the 920 contract, but we could easily wake up tomorrow morning and have that flip-flop, right? You'll see the 920 contract has significantly more volume, right, than its counterpart there, that 1220, right? So quite a bit less volume on the December 2020 contract. But again, that could change tomorrow morning. When I get to my desk tomorrow morning about 7:30 Eastern time, right, I'll definitely check the volume. And we'll move to that 1220 contract if that volume, again, it's all based on volume, if the volume has rolled over for us. So keep an eye on that here. And of course, again, tomorrow, right, early in, right, early out. Now, of course, tomorrow, the big news for tomorrow, we get that CPI number at 8:30 Eastern time. That's probably some of the biggest news we're going to get of the week this week. It's been one of those kind of quiet news weeks, right? We had the holiday on Monday. There hasn't been a lot of news, right, besides that PPI number, right, and the inventory report today. So tomorrow really is the big news of the week, right? And with it being, remember, tomorrow's the last kind of next Friday is quad witching, right? Next Friday is quadruple witching. So this is the last Friday before we go into that quad witching week next week. Now, we'll talk about the quad witching week in next week's newsletter because Monday and Tuesday should be pretty straightforward. Wednesday, Thursday, Friday next week are where things start getting a little bit jumpy, a little bit weird, right? So we'll definitely talk more strategy for quadruple witching, which again will really come together next Wednesday, Thursday, and Friday. So there's definitely a sense of urgency for tomorrow morning. Hopefully that 8:30 news report will really kickstart, right, this market here tomorrow morning because it is a Friday, and we always know Fridays are a bit of a variable, right? Sometimes they're very good. Sometimes it can be a little bit slow, right? So, my strategy on a Friday morning is I try to get to my desk early because I don't want to, we have a smaller window on Friday. So try to get there early, try to really make the most of it. Stay patient, right? Don't force it. Stay patient, stay disciplined, and wait for the best setups. And I'll give you guys some ideas on some good entries for tomorrow, right? And of course, don't forget, right, we'll have a front row seat for that CPI number tomorrow morning in our trade room. We open our trade room every morning, Monday through Friday at 8:30 a.m. Eastern time. I would love to have you there, 8 o'clock Eastern time, I should say here, right, at 8 a.m. Eastern time. We'll be prepped up and ready to go for that 8:30 news, right, tomorrow morning. And don't forget, I'd love to have you with me there every morning. What I'll do is I'll make it easy for you to get registered. I'll put the membership links you need in the description of this YouTube video. So grab that link in the description and get registered as a new member and come out and join me tomorrow and trade this stuff together in the trade room. Speaking of which, all right, so opening of the charts here for us this evening. I got the S&P. I got the crude oil, right? I got the gold here on our radar for tomorrow. Boy, gold has a nice pendulum swing. Got that big move up. Got a nice pendulum swing target. Looking for a short on the gold tomorrow. Oil had a nice little bear move into a triangle and a strong breakout. Looking for a breakout pullback on the oil tomorrow morning. And then you got the S&P. Right, boy, the S&P tried to push through those highs that we talked about, that pendulum swing high. And again, about 10 o'clock to 11 o'clock, it just collapsed. The S&P's got a really nice combination here to look for tomorrow. Let's grab the S&P here, and let's take a look at what's happening here on that E-mini. Now, of course, you can obviously tell the S&P is bearish right now. I think we can all safely say the S&P is bearish. What I see going on for the S&P is I see a strong bear move down into what looks like a bit of a range, right? The moving average starts to flatten out, right? So bear move into a trading range. Now, that really is, in all reality, that's the most important piece of this puzzle right now because, as we talk about quite a bit on this newsletter, anytime I see a bear market into a trading range, there are really three basic patterns I like to use. One of them is that buyer failure pattern above, right? So we wait for the breakout, we wait for those buyers to try and fail, right? And we sell into stops, right? We call those two-try failure patterns. That's my favorite, right? When we have a bear market into a range, we basically wait for the buyers to break out and fail. The second type of pattern is a breakout pattern. There's two breakout patterns I like to use. One is a 1, 2, 3 breakout pattern, which is just like it sounds, 1, 2, 3 legs. Then I like to mark up that low, mark up that high, and sell off of that high. Right, what's one of my favorite breakouts. And the second one is called the two-try breakout, which is a strong breakdown. It's a shallow pullback, which barely touches the moving average, a lower low in price, and a trap above that high. So these are my three favorite setups, if you will, right, to trade a bear market into a trading range. The first one is a failure, right? The second one is a 1, 2, 3 breakout, and the third one is a two-try breakout. Now we're going to use those two-try breakouts a little bit later on oil and the gold. So you definitely want to make sure you stay tuned on those charts because I've got a couple of those that I think are going to be the best fit for the crude oil and the gold. But at least now you know these are the three basic components that we're looking for tomorrow. Everything else is really just kind of fluff, right? Everything else around it is cherry on top. So we have that big move down. We have that, again, maybe it's a rectangle, maybe it's a triangle. It's a range, right? It's a range. And that range is going to act like a magnet, right? So what goes up will likely come back down. What goes down, it's got to really push, or else it's going to get sucked right back up right into that range here. Now, we're bearish, so I'd like to find some resistance levels above the range, right? One of the things I'm going to give you as a client of mine is I give all my clients a big checklist, right? And we work our way down that checklist to qualify every trade that we take, right, in the trade room. So knowing that, right, one of the items on my checklist is to look for resistance levels, right, above that trading range. Because what I'd like to do is I'd like to combine that two-try failure pattern, right? Combine that failure with those levels of resistance, okay? Pretty easy so far. Now, the trend lines are pretty, or the reversal lines here are pretty simple, I think, right? So I marked up those prior swings. That would really be what I hope we get tomorrow, right? If I had it my way, we'd be up around that 33.74, 33.72 area, just because those are some really juicy levels of resistance, right? I mean, I think everybody would really take a good swing at that one if we get that nice deep pullback, right? Because we haven't touched that level yet on the snapback, right? That hasn't been seen yet. Now, I'm also marking up the lows of this, right? These two lows. I'm bringing that up around the high, and just look at how well that lines up right there, right? That, again, that would be kind of my home run area to find that entry pattern. I'm also, you'll notice, also looking at these lows, right? Marking up these lows. Now, that fits pretty darn well. My only concern with that channel or that level of resistance is it doesn't really give us that much open space. You know what I mean? And whenever there isn't a deep enough pullback, oftentimes those patterns will tend to fail. That's the only thing I'm worried about with that shallow pullback, right? So that's the general idea. I want to sell high. I want to sell at resistance above the top of the trading range. And really, think about these two entry patterns, right? So you know kind of what I'm looking for, but think about these two entry patterns. One would be the easy one is we get that nice pop up. We get into the sweet spot, right? In the sweet spot. And then, of course, the moving average comes over. The buyers, they try to get long on this, right? Once they get long, now we know exactly where their stops are, and we can now literally target their stops, right? We can literally sell into those stop losses for, again, what I call a buyer failure pattern, right? The two-try buyer failure. Buyers try once, buyers try twice. You're targeting those stops, right, for that snap back down. Now, remember, when you get a setup like this, you can actually measure the amount of the move up in the amount of the move down, right? See what I'm doing here? I'm actually measuring what we call a pendulum swing. Now, this is a big piece of the gold chart tonight, right? So you want to make sure you watch the entire video tonight, because we're going to put a lot of these pieces together on the gold and the crude oil, right? The S&P is just a little bit of an appetizer here for tonight, or for some of us, right? It's the main course meal for tomorrow morning. Now, of course, I've got that move up. I can use that move down, and that will be an easy target for us, right? Take some off at the low of the range, hold a piece of the position down to that pendulum swing. Now, the only thing I'm concerned about is what if we get just a little tiny, you know what I mean? A little tiny pullback, right? How do I do that? Because that's not going to be as desirable, right? It's still going to be a valid pattern, but it's not as desirable. That's the problem. It's not going to give me the ability to risk small to earn large. That's the reason why I like to find resistance levels way up above the top of a range, because if I can sell high, I can get a good risk reward. I don't have a very good risk reward ratio if I'm selling too close to that trading range. So what's the way to work around this? The way to work around it is to look for another pattern. It's called a trap pattern. So of course, if I see a relatively shallow pullback and the market pulls back, what I'll look for what is really the most dependable way, right, to get short when you don't have a very deep pullback, and that is what we call a trap entry. Now, usually what will happen is this thing will come in like that, right? They'll bounce off the moving average once, right? They'll bounce off it twice, and you'll get that little trap high up there. The trap high is my way of buying as high as I possibly can in an environment that is really going to be difficult to sell as high as I can, right? To be good, that's difficult to sell high because we're not getting a very deep pullback. So keep that in mind as we go, right? The two try failure goes up, buyers try and fails, and then you get a little trap for those shallow pullbacks. Now, guys, these two patterns alone will be enough to kind of kickstart your range trading career, right? Really, a lot of ranges we see. And we cover all those patterns, right? The traps and the failures, we cover those in our free trading courses, right? Now, of course, we'll trade this stuff together tomorrow, so we'll do it together in the trade room. But if you're not with me in the trade room, grab that free course that just popped up there, right? I'll put a little button that pops up there in the right-hand corner. Pause the video, register for the free course. That way, the next time we do this together, and I say 2-try trap or 1-2-3 breakout or 2-try failure, you'll know what I'm talking about, and we'll be able to make the most of our time together here. And again, like I mentioned earlier, right, you can always come out and trade this with me every day in the trade room. I'll put all the important links in the description of that YouTube video. Now, how do we break down? Right? Where's the breakout going? Now, first of all, where's our next objective? Before we try trading that breakout going lower here, where's the next objective? The next objective is all the way down to that 32.95. So there were two patterns we talked about earlier, right? They're relatively simple, but they require some patience. One is that one, strong move down, two, pull back to the moving average, and three, jump off the moving average. Okay, if we get that 1, 2, 3 breakout, now I'm going to mark up that low. What I'll probably do is try to combine those highs up there, right? To combine those highs. It all depends on how the market breaks down. Sometimes it works, sometimes it doesn't. But I'll try to find that hidden channel there and look to sell right off the high of that hidden channel. Again, these are called 1, 2, 3 breakout patterns into hidden channel pullbacks. That is by far the most reliable way to trade a breakout. The more aggressive way requires an aggressive strong move down. Then we look for that shallow pullback, that lower low in price. The key here is strong move. That sets the table. Shallow pullback. That creates urgency. Then that lower low confirms we mean business. Once I see that strong move down, I see that shallow pullback and that lower low, now we know, right? Get ready for that trap high, again, to make sure you're not selling low, selling at resistance, selling high on the way down. So some food for thought there tomorrow. The only thing you got to worry about here for tomorrow really is just stay away from the middle. Right? Stay away from that middle. And as we saw today, the trade room, right? It was a while before the S&P really broke free of that trading range it spent a lot of time in. So if you have to, right, use duct tape if you have to, but keep those hands off the mouse when we're inside of that range and wait for that pop, wait for those buyers to fail and short that sucker right back down into that magnet, right? That will be the trading range. Now, how do we buy this market right now? Can we buy this? We can buy it as long as we can turn this momentum around. The problem we have is right now, I'm not in a position right now to call a bottom on this. You know why? Because we're not at a turning point. Now, if we get down to that 95 area, then I can start looking for crown reversal patterns, but we're not there yet. We're definitely not there yet. There's a good chance we keep going lower here for tomorrow. Now, not to say we can't go higher, but for me to want to take risk, right, for me to want to put capital to work, you've got to get momentum back on your side, and the way to do that is a strong move up, a pullback to the moving average, a strong jump off the moving average, right? We call these what? 1, 2, 3 reversals. And what do we do with it? We then mark up that high. No, we don't chase after it, right? We mark the high up. We mark up the low with that hidden channel, and we look for that first test because the first test is always the best test off that hidden channel pullback. Again, we call it a 1, 1, 2, 3 reversal into a hidden channel pullback. And believe me, guys, I know it's difficult. We all want to grab that first pullback. I hate to watch it go without me. But remember, that first pullback, if it fails, see ya. It's going to tumble right back down into that trading range. I would much rather wait for a higher probability trade. That's probably a 30% winner on that first pullback, whereas you're well above 75% right on that 1, 2, 3 reversal right into that hidden channel pullback. Target in this situation, we definitely have to look at potentially the 3,400 being a magnet, but more importantly, a retest of today's high at 34.24 and a quarter. Boy, those buyers, they really tried to push through that high this morning, didn't they? It was pretty remarkable how stingy they were at those highs. All right, the S&P, I think we're looking pretty good, right, on the E-mini S&P tomorrow. Hopefully, I will see you there, right there with me tomorrow in the trade room. In the meantime, though, let's keep going. How about some oil? Boy, that oil market all grind and chopped up here today inside of a trading range. Now, real quickly here, I think the most important thing is, let me zoom out real quickly here so you can see where we are, because this is really important. You can definitely tell, right? We get that big bear move down, right? There's your trading range. And what did we talk about before? Ranges are what, right? Ranges are, yeah, they're magnets, right? They're magnets. So that trading range, 3660, 3650 area, there's a big bullseye right back down to retest those lows here. So we have to assume that with these buyers getting a beautiful chance to run this thing back to that 39 we talked about last night, right? Because they struggled with it, and now we're really running lower, we have to assume they've got one thing on their minds, and then it's to get back down to retest that 3620 area. Now, once we kind of get a bit of an idea of what the big picture looks like here, right? What's the first thing that stands out on this chart? No, it's not the trading range. The trading range really doesn't stand out right away. You've got to kind of look for it. What's the big sore thumb on this chart? What's the big red flag? That strong move down. Right, that strong move down. Why is it a big deal? Because anytime we see a strong move in one direction, what does that do? It opens the door for another leg, right? Anytime we see a strong move in one direction, we know the chances are very good we get a follow-up leg, and possibly all the way down right to that 36 and change down there, right, to retest that low. So that's kind of the big thing, right? We're definitely bearish. There definitely is a triangle, right? A flat moving average, a magnet, right, if you will, right? A magnet, if you will, up around that middle, 37.72. But again, that big strong move, that's the big clue, right, going forward here tomorrow. Because what that does for me is it tells me there's a sense of urgency in this market right now. Sellers will be trying to retest that low. So we know we're bearish. We know we have a sense of urgency. In a bear market, I want to sell at resistance, right? I want to find resistance levels to get short at. And we've got a lot to choose from. You know, everything from this trend line coming down, which is really the trend line I hope I get a chance to use tomorrow. We might not get that deep of a pullback, though, just because of the strength of that move, right? I mean, again, you've got such a strong move there that really any pullback, really anything above the moving average right now will probably be seen as a selling opportunity. On top of that, we've also got this trend line coming up, right, which could also be used tomorrow as well, right? That's kind of almost like a reversal line. Right? It's prior support to be used as resistance. On top of that, I've got my prior swings, which of course can create the battle zone for us. And then what I think will probably be the most important clue for tomorrow is that new hidden channel down, right? Think of it almost like a 1, 2, 3 breakout there, mark up that low, mark up that high, and get short right off of that high. So really, I mean, that's the meat and potatoes. That's the plan for tomorrow here on the oil. I think my only concern is that oil may just keep on bleeding lower. Right, because the gig is up. Right, the gig is up. I don't think anybody can look at this chart and think, I wonder where we're, I wonder where we're going right now. I have no idea. We're going to go back to those lows, right? Or at least the bears want to go back to those lows. And I would imagine a lot of people probably see the exact same thing. So we may see this thing kind of grind lower here, right, as we go. So we'll definitely keep an eye on that 2-try breakout pattern that I talked about earlier. So I want to get short. I want to sell at resistance right overhead. If the market goes lower, I'm going to keep an eye out for a couple key patterns. Now, really at this point, I think the big thing is how do we pull back, right? What does the pullback look like? For example, do I get above the moving average here? Can I get a buyer, right? Can I get buyers to come in and try to buy that pullback so I can sell into their stops? Right? That would be a great setup. And in fact, you'd probably be able to rope those buyers in on a failure into pullback combination. These are very, very common patterns here, especially in a breakout environment, right? That is a buyer failure, right? We're selling into stops. And then, of course, a bear pullback, right? Kind of a breakdown pullback. So 2 potential entries on that pop-up, that buyer failure, and that breakout pullback going lower. If we do get dragged all the way up into that trading range, right, up into that magnet area, now what I'm going to do is I'm going to start, because it is a magnet, I'm going to use one of those nested failures. So if it really does pop higher here, what I'll do is I'll wait for buyers to try once. I'll wait for them to try twice. And then once I've got those buyers trying twice up, and again, this is if we really pop, right? We really pop going higher here. Once I get those buyers trying twice, now I know where their pain is. And these, don't forget, these what we call nested failure patterns, these oftentimes will collapse after they go, and you might not get that pullback right away. We oftentimes see the market grind or run lower. We get a shallow pullback and it keeps running, right? In other words, you get the failure, but you don't get the pullback, right, combination. In those scenarios, you know what I'm waiting for? I'm waiting for that trap, right? That trap becomes your best friend for that follow-up entry. So again, in this scenario, we're popping up, right, into that range magnet area at 72, which I think will be great. But what's going to do is it's going to put you back into this mess, right, that is the middle of that trading range. And the easiest way to protect yourself against that kind of whipsaw that happens around there is to let them try once, let them try twice, right? Lower lows on those 2 tries, right? Let them try once, try twice, and then hit them right into those stop losses for that move going lower, right? So those are some 2 setups I'm watching for as the market pulls back. If the market goes lower, right? If we keep on grinding lower, here are a couple things to think about. One would be if the market keeps on running lower and we get that shallow pullback with that lower low, that creates that strong move down, that shallow pullback. Remember, the shallow pullback gets under everyone's skin, right? Doesn't it, right? Doesn't it? I hate it when I'm waiting, and all of a sudden it takes off without me. There's nothing worse. I don't know whether or not I dislike a loss more than I dislike missing a winner, right? What do you think, right? In the comment section below, what do you hate more, right? Do you hate missing a nice big trade, or do you hate losing, right? Losing a trade, right? I'll tell you, for a lot of people, it's a close call, isn't it, right? What's worse for you, right? Drop me a comment in the comment section below. I'd love to hear what gets under your skin more. Is it missing a trade, right, and missing a nice big juicy winner, or is it taking that loss? I would love to hear, right, what's more important for you. So for this though, that's what happens is that shallow pullback. What it does is it just gets under everyone's skin and it creates this FOMO, right? It almost creates like I'll show you, right? When it pulls back, all the bears that were waiting on it, they come in to hit it hard, right? So again, if the market keeps on going here, right? We open up and we keep on going lower here. We get that shallow pullback, that lower low, right? Trap high will definitely be something watching for right here as we go lower. And again, the objective to get down to is that 86, right? 17 area. Another situation would be if we were to see, for example, like a shallow pullback and a run going lower, I'll mark up a new low. I'll adjust that channel, right? So there's a chance obviously this market may continue going lower, right? Continue going lower here, shallow pullback, running lower there. What I'll do is I'll mark that low. I'll mark that high, find that new hidden channel, and we'll keep playing off the high, right, of that hidden channel as we go. And obviously there's some nuance to that, and we'll go over more of that tomorrow morning in the trade room once we get our hands on this chart. So the only thing we haven't talked about yet, right, obviously if we do go sideways here, right, if we go sideways down here, this becomes a range. Right, we know the plan for that, right? Get short above the highs, right? Same plan as we had on the S&P. How do we buy this market? How do we buy this market? Can I buy right now? No. This is, in fact, this is the last. This is the worst. Well, and again, obviously, anything's possible, right? Brand new day starting up here in Asia right now. But I'll tell you right now, you cannot get in the habit of trying to be a buyer into a very, very strong move like that. Now, once they complete their objective and they retest that low, now that loop has been closed. Okay, now you can start to idea, buy setups there. But into a real strong move like that, being a buyer is just, even a broken clock is right twice a day. This could easily V-bottom off of this low, but just don't get in the habit of trying to buy into, right, such a strong move going lower. So I'm not at a turning point, right? We're not at a turning point. We're not down here. We're not looking to buy off a turning point right now. So trying to be a buyer, I really got to wait here for a turn of momentum. Now remember, that range magnet could easily drag us back in, but they have to hold that pullback, and they've got to give us a really strong move going higher here. They've really got to show us a big turn, right? It's not enough to get a strong move up. They have to hold that pullback and run, right? So if I can get a strong move higher here and they can hold that pullback, well now I'm looking much better. But here's where another one of those trap patterns comes into play, because now we start worrying about buying into these highs up here. Right? This is one of the hardest parts. You're going to see just like this on gold as well, right? Oil and gold are very similar situation. If we get a reversal, we're going to be looking for that pullback to the low of that channel. The problem is, though, it's going to be in a tough spot. So I'm going to be looking for what we call basically a two-try, right? A trap, right? Waiting for that shallow pullback, that higher high. And I'll be looking for traps combined at the low of that channel. So as we get to the high of that channel here, we know where we are, as we get to the high of the range and the low of that channel, we know where we are, and because we're going to be up above the high of that range, traps are going to be my go-to after a reversal. So think of this as a 1, 2, 3 reversal into a hidden channel pullback, but it's more of a trap off that pullback. So keep your eyes on traps if the market can give us that nice juicy reversal. We always love that first pullback to the low of that channel. So even if you don't get a trap, it's still a very good place to look for the long. It's just if we get a trap on there, that will almost make that thing bulletproof as we go back up to retest those highs. So I think oil is great here for tomorrow. Just remember, look for that nested failure, right? If we do get that deep pullback, because we don't get chopped up in the middle. And again, what do you think? What's worse to you, right? What really gets under your skin, right? Is it a missed opportunity or is it a losing trade, right? I have a good guess as far as what you guys are going to say, but I want to hear it from you in the comments section below. How about some gold? How about some gold here? Wrapping things up here on the gold. Now, gold might be able to flex its magic muscles, its pendulum swing muscles for tomorrow. We talked about this last night, right? One of the closest things to magical in these markets are these pendulum swings. So the gold is definitely starting to kind of beat that drum here right now. Now, let me kind of zoom out a little bit here on this and then kind of see what happened, right? We finished the day yesterday inside of that trading range. It pretty much extended out today as well, right? So it pretty much was a bull market into a trading range. Now you'll notice they never got any buys below the lows, right? So there wasn't any seller failure patterns, right, below that low. Then of course, as you can see here, right, we get that 1, 2, 3 reversal, right? Mark up that high, mark up that low, and people are buying the first pullback to the low of that channel. If you're a little more aggressive, 1, 2, 3 breakout, mark up that low, right? That could also be seen as a 1, 2, 3 reversal, 1, 2, 3 breakout there as well. So you can easily see these patterns at work. But you'll notice they didn't do a very good job at holding that, right? They get that big push up. Now remember, this pendulum swing level wasn't here before, right? There wasn't, 75.3 was not a level of resistance to begin with. But once they collapse back down now, right? Now we know that trading range is a magnet. Okay, we know it's a magnet, so we know why the market, right, if it couldn't keep going higher, we know pretty much why it collapses back down. And again, I can measure the amount above the range, and I can use that now as a target for tomorrow. So really, our biggest challenge right now on gold is just I think it's pretty easy to see we're bearish. Right, we get a nice little 1, 2, 3 reversal, which of course is what's causing me to mark up those lows, mark up those highs. I'm looking for a short. We're up around that 1960 area right now. The only really challenge we have is if this market kind of gets dragged into the mess of this range, right? That's kind of the only thing we have to really kind of worry about here on this gold. So really, there's kind of three basic scenarios. We get the pullback, and we look for those buyer failures to sell back down. Maybe we get stuck in the mud here, right? And then wait for the pullback, buyer failure, and back down, okay? Or maybe we continue going lower here, right? If the market holds, because of course, that is a very strong move down. I'm sure you can see that, right? That's a big, big clue. So a very strong move down. What does that tell me? That tells me there's a big bullseye right on that low. It also tells me sellers will be a little bit aggressive trying to get short on this, going back to retest that low. So we definitely want to be short on. We definitely want to be looking for a short side, right, rather than a buy side on this. But if they, for example, if they hold this pullback and they run, this now can open up another, right, hidden channel and make it start getting more serious here, right, about getting in on the way down to that pendulum swing. So those are kind of the three basic scenarios I'm watching for right now. Stay away from the middle. Again, it's basically a bear market that ends up back in the range from yesterday, and we're using the size of that move to project the rotation right down to that 1934 and change here, right? That's the basic idea behind it. So do we get that pop higher? Right? Do we see that pop higher? Now remember, you really could break this down into three types of pullbacks, right? One would be a very strong pullback. If we really rip higher here, but we haven't held it for reversal yet, right? Remember, they get to give me a 1, 2, 3 move, right? 1, 2, 3, and then I can mark that high, mark that low, and I can buy that low, right? But if they get that strong move up like that, now what's the best pattern for that? Well, first of all, what's my concern? My concern is that much strength, the buyers are not going to mess around, right? They're going to have a sense of urgency to refill that high, right? To retest that high. So because of that, let them try once, let them try twice. Once those buyers come in and commit twice on it, now we look for traps, right? Trap high. We look for chances to sell into stops. This is a great setup if we can get it, right? Trap high is the best. Right, we call those crown reversals. In this case, it wouldn't be much of a reversal. It'd be a nested, right, trap or nested fill with a trap high on it. And then, of course, it'd be right that failure there. So strong move up, right? Again, big, strong pop. Momentum is a concern now. But again, we haven't reversed yet. Remember, you can have a bear market where the bulls have a strong shot, but it not be a bull market yet, right? In this example, that's exactly what it would be. It's a bear. It's not a bull market yet. It's just a strong pop. And that strong pop says expect that next leg, right? So give him once, give him twice. If you can get that trap, great. That's the best one, right? If not, sell into those stops on the way back down. Or we get up into this kind of sell zone overhead, right? Buyers come in, they try to get long, and we're able to sell, again, above the range, right? That's the key here. Up at resistance and above the range. Now, sometimes what happens is we get the move up and it comes right back down so quickly that you have to wait for a trap, right? So remember, what happens is if you get a failure pattern that's right inside that range, look for a trap entry, right? Traps are the go-to entry when you don't want to sell low, right? When you're worried about, well, how do I get a good risk-reward ratio if I'm right inside that range? Remember, ranges are where good trades go to die, right? Ranges, stay out of the middle. And I don't care how good the pattern is. I've seen so many great patterns that trigger just a little bit inside the range. And what happens is they kick back against you, right? They kick you out. And then the trappers are waiting to trap, right? They're the ones taking your stop loss and shoving it down your throat, right, as it runs back lower here. So 3 different types of pullbacks here. I don't want to repeat myself, but this is where you want to be watching for those entries. It really depends on, is it a real strong pop? Is it a good modest pop? Or is it a really shallow pullback? You can see it's, this is why I tell my clients, it's not as simple as go find some patterns, right? It's all about market context. In this case, how far away from that range are we going to be? Right? That's the big context clue right now. If we get stuck in the mud, stay patient, wait for the pop, wait for the buyers to try and fail, and hit them, right? Hit them where it hurts, right into those stop losses. If they pop and they hold, right? 1, 2, 3, reversal, right? Now I can mark up that high, I can mark up that low, and now I can confidently buy that first pullback off of that low target, of course, up around that 1975. If the market rolls over, right, and runs lower here, we will continue to stay focused on selling high, marking that low, marking that high, right? Selling off the high of that new channel. If this thing just dumps, right? If it just dumps and really runs, okay, and that's where a little bit of experience comes in. If it dumps and runs like that, right? Watch that shallow pullback, right? Watch that shallow pullback. Everybody hates those shallow pullbacks, and that's why those traps, right, work so well. So strong move down, shallow pullback, lower low in price, trap high, 2 try, trap setup, targets, of course, again, down to that 1934 and change. And if it really starts to turn nasty tomorrow, right, we get some other targets waiting on there at 26.3 and 1911. We'll cross that bridge tomorrow morning once we get there. All right? But speaking of tomorrow morning, boy, we are going to be there before you know it. Tomorrow, of course, is Friday morning, right? Make sure you get there early tomorrow morning, 8 o'clock Eastern time. We open the trade room. I want to see you there, right there with me tomorrow morning, 8 a.m. in the trade room. I'll put all of the membership links you need to get registered right below this video. I'll put a big button for you below the video tonight on the blog, or I'll put a link in the description of this YouTube video. As always, don't be afraid to call the office if you guys have any questions about anything we talk about in tonight's video. Don't be afraid to use that live support tool right on the right-hand side of the website. And as always, have a great Friday. And of course, tomorrow being September 11th, obviously, as somebody who lives in the United States and really from anywhere in the world, I know all of us have been affected by the tragedy that happened back in 2001. So I'll tell you, my heart goes out to anyone who lost a loved one in those towers or anywhere around, right, that the scene there in New York City. My heart goes out to everyone. There's probably nothing I can say, right, to make it any easier. But I'll tell you right now, tomorrow we're gonna get to work tomorrow morning. We're gonna do our thing to get in the trade room, right? But I definitely hope you'll take some time tomorrow to reflect, right, on how different our world is, right, because of that, right? I love you all. I hope you guys will share that love with everyone else in the world tomorrow as well. So I wish you a very special, however you want to celebrate it. We'll all celebrate it differently. I know it resonates very deeply with me. And I know no matter where you are on this planet, you know exactly where you were on September 11th, 2001. So whatever your celebration looks like tomorrow, I wish you and your family the very best day tomorrow. Hopefully, I will see you tomorrow morning in our trade room at 8 o'clock Eastern time. If not, have yourself the very best 9/11 Patriots Day, as we call it here now in the U.S. Have your very best, right, Friday possible. Keep in touch, right? We're always here to help if you guys need help along the way. And as always, be well out there. And especially tomorrow, be nice to each other, will ya? And be here next time. As always, adios, amigos. Bye-bye for now.